B. This is your daily financial news for September 14th. We need to talk about PPI. We need to talk about Redfin and the report that return to office is going to cause home sales and, more importantly, losses by owners. So we need to talk about that. We need to talk about somebody saying unemployment needs to jump 50%. We need more pain in the market. We can talk about rent concessions and something that Cody Sanchez said, or at least put out on Twitter, that I thought was very well done. So folks, let's get into it. Let's start with inflation first. Yesterday we got CPI. Today we got PPI, right? Producer Price Index. And again, it came in hotter than expected. Likely a lot of it would be related to energy. Headline was the big one, up 0.7% month on month when expectations were for 0.4. So a pretty significant beat. Core up 0.2, expectations of 0.2. So again, core as expected. Headline certainly hotter than expected. And it's my belief that a 0.7 month on month is the largest increase monthly probably in the last 12 months, but I need to go back and check that. So is this a sign that inflation is reigniting? Is this just simply a realization that energy, gas is a big deal? Remember, gas was responsible for, I think it was 10%, or had a 10% jump. So again, lots of stuff going on. Is it energy, whatnot? We do got to watch energy because, again, at some point the U.S. will refill the Strategic Petroleum Reserves, the SPR, and there's an OPEC meeting, I think in a week or so. Will they cut? I don't know. Oil is near 90 bucks. So again, there's a lot going on. We need to watch energy. Redfin put out a very interesting article about return to office. So Redfin went out and interviewed potential home sellers, right? Sellers equals supply. And apparently 10% or 10.1% of potential home sellers in the next 6 months would be because of return to office. Redfin interviewed a couple. They did not give their names for obvious reasons. Interviewed a couple that is having to list their home and sell it and take a $100K loss because they have to go back to Seattle. Yes, folks, offices in Seattle are mandating that you're there 3 days a week. And now instead of, work from anywhere, which was the song and dance, they're now saying, get your butt back to the office. So will return to office bring supply? If it brings supply, where will it bring supply? It will probably bring supply in the places that got the most population increase. I'm talking Boise, for example. I think Boise was a very hot destination for folks from the Pacific Northwest. So again, things to watch. In addition to 10.1% potentially selling for back to office or return to office, what are other reasons people sell? This is important, right? I'm on record saying the move-up buyer or the housing market's broken, the move-up buyer is dead, right? People staying in place. But why do people sell, right? Because we're still going to do, 3.8, 4.1 million transactions. So still millions and millions of home sales and purchases. 22% are moving to be close to family. 21% are moving to a lower cost area. And 20%, they got a better deal on a home. So again, you add that to the 10%, that roughly covers 70%. So again, all the other ones must be pretty tiny. So very, very interesting to look at. I don't know if we talked about this yesterday, but Citigroup and Wells Fargo are looking to reorganize, AKA layoffs. Google talked about laying off folks in recruiting. So again, are we going back to the white collar recession that seemed to percolate earlier in the year and then subside? I don't know. It is something for all of us to watch. I think I'm saying this for the first time. I think a recession is likely in the next 12 months. I don't know what quarter yet. I I haven't forgotten my horrible Q2 call of this year, so I'm being diligent. But I do think a recession will be called. I think it will be very similar to the rolling recession of the 1990s. But yeah, it is going to be very interesting. I am most curious about student loan repayments. They start in earnest October 1st. We got some early data that about $6 billion in payments had already started in September. That money comes from somewhere. Is it coming from savings? Maybe. Is it coming from investments? Maybe. Is it coming from less discretionary spending? Maybe. Is it meaning that credit card purchases go up because you don't want to change your lifestyle, right? So you pay your student loan, but then you charge whatever you're doing? Maybe. There's a lot going on, and I think this student loan repayment thing is not well studied and will certainly impact our economy. Where? I am not sure. It's going to be fun. Is it travel? Is it services? Is it goods? Important stuff. Fed funds futures, again for September, over 90% still saying a pause is coming. It is I think it's wildly interesting. About a week ago, so pre-CPI, pre-PPI, which both were hot on the headline, the odds of a November rate hike were 51%. 51, just over a coin flip. Today, after a hot CPI, after a hot PPI, the chances of a November rate hike are now 40%. I think the market is saying the Fed is done. Don't know if you saw it this morning, but ECB, European Central Bank, raised a quarter point. Their Fed funds equivalent is now 4%. They did note that inflation is easing and that they could be nearly done raising rates. Again, folks, I think most of the central banks of the world will be pausing from here because they have gone super fast and they need to make sure nothing massive is broken. The other economic report today came from retail sales. Boy, the U.S. consumer consumes. But again, please remember, a lot of the economic reports we talk about are not inflation adjusted. So when you see retail sales up 0.6%, expectations of 0.1%, first, that's impressive. Second, how much of that is inflation? Because again, retail sales will include gasoline, and gasoline was up 10%. Now, without question, gasoline is not a large enough component of spending or retail sales to make up that difference, but it's responsible for some of that increase. So again, lots going on. There is a property developer named Tim Gurner. Let's call him Tim Gurner. Apparently he's worth about $600 million, and he was out talking about unemployment needs to rise 50%. So simply said, what does that mean? If you're at 4, it needs to go to 6. Let's just understand what 50% is. I've seen some people saying unemployment needs to go to 50%. That's not what he said. He said unemployment needs to rise 50%. Where he is getting a lot of heat is because he followed on that by saying we need more pain in the economy. This is where you went south, good old Tim. You shouldn't have said this, Tim. This is you're going to be in hot water for this one, for a 24-hour news cycle. We need to remind people they work for the employer, not the other way around. Where Tim was going with this is he was at a property conference and he was talking about the trades, right? The plumbers, the roofers, the painters, the electricians, all of those, not working very hard and requiring huge pay and all of that. So again, very, very interesting stuff. Again, it will be It'll be interesting to see where that goes. It is very interesting because, again, I think one of the things that I now believe that we will hopefully see play out over the next 3 to 5 years is this decade will be written about in the history books as the one where labor, the employee, got theirs. When you look at the kind of model around employment, jobs, all of that, there are really 3 pieces involved. There's obviously the employee, aka labor. There is management, executives, whatever you want to call that. And then there are the stockholders, the market. How do all of those play? Well, the stock market, right? You buy stock, maybe you get dividends. Are you doing stock buybacks, right? Distributions, what is going on there? Executives, are they taking out their big chunks via options or bonuses or whatnot? And then there's the employee. The employee is the largest component of expenses, but they are often the last to get theirs. I believe, given the structural change in our demographics, with our restrictive migration or immigration policy, I don't think there is any choice but to have labor get theirs. And it's been 40 years. In the 80s, it went to the executives. In the 90s, it went to the stock. And it's time. I really do think the bottom half of labor will see a disproportionate increase in wages, real wages, not nominal. And that will have impact throughout the economy because, as we know, as we've seen the last 2 years, you give people money, they spend it. They spend it. They don't invest it. They don't save it. They spend it. So it's going to be something to watch. This will not be an event. This will be a marathon. This might be a 100-mile race. This is not something we're going to be able to look at in a week, a month, a quarter, or frankly, even a year. This will be a multi-year progression, in my opinion. Don't know if you saw this, but not only did Southwest, American, and United cut profit forecasts, but now you have Delta cutting profit forecasts on higher cost, fuel costs. Manhattan median rent is now $4,370. Their new leases or their activity down 14%, and days on market has gone up from 26 to 39. And just for the record, going from 26 to 39 is an example of a 50% increase, right? You went up 13 days, and 13 days is 50% of 26. So again, that's an example of 50%. Redfin is starting to report that landlords are starting to give concessions. Concessions could be like half off deposit. Maybe it's 1 month free. I read an article about an apartment building in San Francisco given 11 weeks of free rent. That's almost 3 months. Yeah, San Francisco is in trouble. And then let's close with something Cody Sanchez said. Cody Sanchez put out a quote that said, "I made millions brewing my own coffee at home. Said no one ever. If you want to achieve wealth, you need to create, not save." Again, folks, my wealth formula is remarkably simple. Step 1, you must create what I call dry powder, disposable income, whatever you want to call it. You can do what a lot of people talk about, create more income. You can reduce expenses, or you can do both. But without having that flywheel of disposable income growing, it's tough. Step 2, you must become elite. It is very tough, in my opinion, to be to do lots of things well. There are some of you that are gifted that can. I can't. I can't do the diligence in the stock market and do my diligence in real estate and do all the other things. I personally had to pick my thing. You have to become elite at something. And then finally, the one that should make you feel good, but probably drives you crazy, you need 10 years. You need 10 years. If you do those things, getting wealthy, buying assets, getting cash flow, I like your chances. I like your chances. So folks, let's catch you up on a couple of things that are going on in the one rental at a time universe that are possibly one-time only things. One, we are starting the 10-day boot camp this Sunday from 8 to 10. Day one boot camp is going to be talking about how to find or pick a market. Some of you have a market. Great. If you paid for the boot camp, come. Because we're going to talk to the people that haven't. We're going to answer any and all questions. We're going to make sure everyone who doesn't have a market has a set of activities to do before our next call. Then I plan to have an hour Q&A. The beauty of putting on a 10-week boot camp is we have people at different stages of their investing journey. So each and every time we're going to take an opportunity to answer whatever burning questions you have. But we will start with the topic of the day. So Sunday, 8 a.m. Pacific, the Zoom invite has already been sent out. We're going to be talking about how to pick a market. What market is right for you? Should you stick local? Should you look out? It's going to be a lot of fun. Step 2, the ORAT event celebrating 50,000 subs is now booked. I have now plunked down a bunch of money and more coming. February 17th and 18th. 41 of the 50 VIP tickets are sold. 41 of the 50 VIP tickets are sold. We have 9 left. I suspect those 9 might sell today. So if you want to be VIP, get the free lunches, mingle in a private room with the speakers. You got 9 spots left. We do have general admission. General admission is much bigger, 200 folks. 200 folks, we've done about 31 tickets, I think. So again, general admission is $199. You will be fed. You will be on your dime. We're bringing in food trucks for you to choose from. You will get a concert. I am paying to have a concert the first night so we can celebrate and party besides just having a mastermind. So folks, I want to see you there. It is February 17th and 18th. I am hoping it sells out in a week so we can just focus on putting on a great event. We will have 11 speakers or 11 speaking slots. I think I've got them all settled. I'm waiting for one more confirmation and we will start to roll it out. It is people who helped build this channel. So you can know that. And then finally, folks, there's about 100 days left in the year. If you're thinking about getting started in real estate investing, the best thing you could do is buy the course, How to Get Started One Rental at a Time. It's only $3.99. You get access to a Facebook group with other just folks doing the work, posting wins, asking questions, networking. It's helped thousands of people. It's winter. It's slowing down. This is the time to learn. It's also the time to write disrespectful offers. But yes, this is the time to learn. So folks, have an amazing day. I hope you stay awesome. Keep doing the work. Take care. Bye-bye.